Let's shift focus away. Then we've got the Reserve Bank of India putting out its first quarter review of the monetary policy tomorrow. And let's take it across to Simran Gill, who's going to tell us what the expectations are.
This time around, most people are expecting this policy to be a non-event. An ET Now poll suggests that majority is not expecting a cut, be it in the policy rate or the CRR. And of course, this comes at a time when there are strong signals emerging from the central bank that controlling inflation is the topmost priority. And most people also expect that RBI would cut close to 50 basis points going forward in FY13. And we, of course, spoke to a couple of bankers who have been clamoring for a cut in CRR for some time now. And some of them have clearly stated that a cut in CRR is an effective policy transmission and will help in bringing down interest rates more than what a policy rate cut will do. So, with liquidity deficit being in comfort zone, how much of a strong case does the CRR cut really form at this point remains to be seen. And as far as inflation is concerned, monsoon continues to remain spoil sport, and with some of the states where the deficit is running over 50%. So certainly most expect that there will be an upward pressure on inflation, and it would be somewhere in the range between 7.5 to 8%, way above the RBI's comfort level. And of course, as far as other measures are concerned, be it on the rupee or any other issue, most do not expect any major announcement coming up in this policy. So will this policy really be a non-event, or whether the governor will throw in a positive surprise, we'll have to wait until tomorrow.
All right, Simran, thanks very much for taking us through the ET Now poll on what to expect tomorrow. We've got Ramit Bhasin now, who's Managing Director and Head of Markets at RBS, joining us on the show. Ramit, to begin with, could you briefly take us through the findings of the RBS survey on the policy expectations?
Thank you for having us here. It was the 14th survey that we have conducted, polling over 100 corporate clients, majority of the large institutions in India. What we have found is a very interesting outcome. 75 to 80% of the corporates polled are not expecting any rate changes in the coming policy meet. A small portion of the survey people, about 20% of the people were expecting a 25 basis point cut. This is diametrically opposite of what we had seen in the previous surveys that were conducted for the last meeting, where 75 to 80% of the people were expecting a rate cut. I think there's quite a bit of polarization of opinions around the media reports, which are widely circulated and have been on TV, that RBI is not expected to move. So it brings about an interesting question that the survey is sort of starting to share with us. It shows that the sentiment is fairly poor. Most people are expecting the government to deliver reforms and RBI to hold steady at this point in time.
Ramit, now interestingly, you're one of the very few people who say that you do expect a cut from RBI in their policy statement tomorrow. Why is that?
I think from a trading call, this is not the House view, from a trading call we are expecting a 25 basis point cut. We think that the world situation over the last 6 weeks has significantly changed, and I think that the growth factor around the world is starting to slow down. We think some of that is coming on shore to India also, and I think if you were to take a 6-week or a 6-month forward view, you will start to see that the growth dynamics might change a lot. Therefore, our view is that RBI should move 25 to 50 basis points, and then we expect a rate cut of 25 basis points in the near term on this policy meet.
Right. So, Ramit, what's the total quantum of rate cuts that you're expecting from the RBI for the current financial year? And putting that in the context of the larger global slowdown, do you believe even that will be enough?
The House view on this is looking at the domestic inflation and food prices and a weak monsoon. The House view is that we would get 50 basis points cut by the end of the year. Our trading view is slightly more aggressive. We think there needs to be a little bit more that needs to be done. So we are hoping for 75 to 100 basis points.
Now, we've seen most of corporate India complain about how high rates are impacting growth. What kind of a message are you getting from your corporate clients?
Well, the situation has been very consistent. I think that the feedback that we have gotten when we poll our clients is that there needs to be something that needs to be done. People have been actually a bit energized after PM's remark on the animal spirits. We are hoping that it follows through with policy actions. And I mean, you know, when you look out the next 4 to 6 weeks, there is a lot on the calendar, and let's hope that we are able to get 1 or 2 of these big initiatives that need to be done, whether it is the FDI or whether it is on the front of diesel prices to be hiked. You know, we just hope that there is some action that leads market to believe that we are moving in the right direction and the trajectory has changed.
Right. Now, Ramit, a lot has been said about government inaction and the impact that just monetary policy easing could have on easing inflation. Now, take us through some of the key measures that need to be addressed as a priority.
It's been widely circulated, you know, GST, FDI reforms, you know, insurance reforms, or if you even sort of just break it down into what needs to be done towards our fiscal deficits, etc. I think the issue simply is we need to make sure that some of the policies that had taken place, whether it was the GAR, is rolled back. I think we need to make sure that the trajectory of the policies and the trajectory of what's coming down the pipeline is in the right direction. And I think you will see that the foreign investors and the money that's come in over the last 2 to 3 months continue to be positive. So people are, I wouldn't say people are excited about India, but I think the value is certainly there.